All right, everybody, welcome to the August 23rd, 2025 day trading webinar breakdown over here at HPT. What I really want to be diving into this week is how to really navigate these challenging market conditions. Okay, now we can't control volatility. We can't control, we really can't control anything other than ourselves. And that's going to be the key takeaway from this webinar is what to look for to really control yourself from getting in and out of the market when it's not in good conditions. Okay, so the first day we're talking about is right here. This is Monday. So the first thing I do every single day is I map out my critical levels. My critical levels are there for one reason, and this is to understand the context of the market just a little bit better. Okay, and what I mean by context is the story. All right, who's in control? Is it buyers? Is it sellers? How do we know this? Okay, this is how I like to approach the market. And it's a very simple way, okay? So you'll see right here we have our critical levels mapped out. Now I'm going to drop down to that lower time frame, and then I'm going to scoot all the way back to Monday. And you guys can see here, this was just a death range, like an absolute death range. Look at this. Now, notice how we're getting absolutely... So first thing I'm going to do here is I'm going to map out the critical levels, okay? So here's end of day, and here's previous day low. All right, these are our main levels that we want to watch. I'm actually going to make them red just to kind of highlight them a little bit more. Oh, God. Oh, God. All right, so here's end of day zone. Here's previous day low zone. And you guys can see something here, right? This range was no follow through whatsoever, okay? And what I mean by follow through is if buyers took control of this, we were looking for a move up to previous day high, okay? And if sellers took control of it, we were going to be looking for plays to the downside target. Now, moral of the story, how can you determine that the market conditions suck so that you, A, close your computer and walk away and save money? Because that is the overall goal, right? Like, we have two jobs as a day trader, to make money and to save money. Okay, now A, make money means that the conditions are fruitful, they're in a good environment, and you also are, trading trends, you're getting good moving average crosses, you're getting clean RBIs, and then the third and most important one is you're not getting these massively large candles. All right, these are definitely a strong sign that the market is not in a good condition or state. Right now, initially we get this nice setup right here. All right, now we got no moving average cross, we got a massive red bar that was ignored. So typically we're going to be looking for a long play when we break out of this, but the reason why I did not entertain this is because of how long this candle was. This candle was almost 70 cents long, okay? And the moving average cross didn't happen after 9:30, so the criteria wasn't present. And you can see there was absolutely no follow through. This thing just continued to go back, forth, all over the place, okay? And it's really important to talk about because it's going to look very good, right? It's going to look very good. I actually ended up getting into the market right as we got this red bar right here to be ignored. Now, this thing cooked in my favor almost immediately and then got reversed right after that. Now, once you see something like this, it's usually a telltale sign that the market's in a bad state, right? I mean, when the strategy isn't working, dude, if I took anything from my journal this week, it's when the strategy works, execute it. And that's what we seen on Tuesday, right? Tuesday, if I just real quick jump ahead, the strategy worked. We locked in countless trades, right? Thank God for Tuesday. Tuesday's the only reason why I'm alive right now. It was a phenomenal price action, and we capitalized on it, right? But we'll get into that. Now, this is the takeaway though. When it's actually working, execute. When it's not working, you gotta be careful because you're going to get caught in this death wobble, and this death wobble is going to cost you tons of money. This and once again, right? How can we know? Very simple. When you get into a position and it doesn't go in your favor, it usually means the market's choppy. Now, that doesn't mean come Monday morning, if it doesn't go your way immediately, that's not working. What it means is tread with caution, okay? there was countless times that the strategy presented itself this day and it just didn't have the follow through we're looking for. We also looked for a short play right here. All right, this was actually a really nice play, right? Look at, we're getting failed attempts here above end of day. Sellers are showing strength, okay? Now we get that moving average cross followed by the green bar right here that gets ignored. That's the short play. Once again, the market sold off very quickly in the downward direction and then sucked back up. The key thing I took from Monday is that I kept my stop losses exactly where they needed to be. I didn't lose more than 30% on any trade. Therefore, I did exactly what I was supposed to do. Okay? Now, once again, we can't control the market. We can control ourselves. That's the key takeaway, right? Think about it. There's nothing that we can really do other in these markets other than be able to spot that something's fishy and shut your computer and walk away. And this goes back to what I always talk about, where we have to be okay with not taking a setup. And that's what I ran into this day, right? Like I ended up taking 3 trades. And, instead of like beating myself up and really like laying into myself about it, because that's not going to serve you whatsoever, I was like, all right, Josh, what's the key takeaway here? Okay. And I always like to remind myself, our job is to make money and our job is to save money. Okay. We save money by stopping out. Okay. We save money by walking away from bad market conditions. Right? We make money by trading our strategy, right? Like those are the core fundamentals right there to actually make money in this game. So when you're getting very, no follow through, when you're getting like, you're seeing the strategy present and then it goes up and just completely reverses, okay, cool, right? And then that's where it's just a choppy day. Things aren't working. And it's okay, right? Like my first 2 trades made a lot of sense. And once again, right, that's like my job. My job is to execute my strategy. My job isn't to sit on my desk and go, oh, you know what, I'm going to wait for the next one. Like that's not my job. My job is when I see, I act. But at the same time, know when the market just isn't marketing. You know what I'm saying? Like when it's not working, step away. It sucks. These sort of days suck. I'm not going to sit here and tell you they ever get better or you feel better about it, right? When you lose $1,000 or whatever you lose, they suck. But what I said really hit hard, because the next day, going into the day, I'm like, okay, guys, like we're not here to make up all the money that we lost. I was like, we're not here to hit home runs on Tuesday. I was like, my main goal, which is my goal every day, is just to execute my strategy. Right? I was like, if my strategy presents today, I'm not going to cower. I'm not going to hesitate. I'm just going to pull the trigger. And let's talk about it here. So let me map it out. We got previous day low. We got end of day. And then we got previous day high. Okay? So once again, we have our pit numbers right here. We have previous day open print, but we don't necessarily need to draw it right now. So once again, my approach is quite simple. I go, there's a 50-50 chance today. I was like, every day, this is what we do. We go, all right, here's our pit numbers. Based off what happens here at the open, we are either going to target upside or we are going to target downside. So the most important part is the open, all right? The open's going to tell us, and if there's other pit numbers, they're going to tell us, right? This is how the market speaks to us. Okay, cool. Market opens up, comes into previous day low. Previous day low was very significant. Selling pressure below 642 meant things were very bearish. But after yesterday, you could see buyers really just weren't trying to give it up. I mean, they were popping up. They weren't really letting go. In pre-market, they weren't letting go in here. So necessarily, you never know. Like, there's no way. I just made a video on this. There's no way to know in pre-market if it's going to go up or down. Yes, you may be able to determine a higher probability of one thing happening over another, and yes, that's cool, but nothing's ever certain. So instead of trying to marry a specific certainty that isn't even there, what I'm going to do is just rely on my 3-step approach. And right here in the morning, we got strong selling. Right here in the previous day low, and then we caught a glorious move right here to the upside. I'm actually going to make 2 charts. This is the 5-minute chart, right? Once again, we'll just comb through this here. On the 5-minute, we got a red bar ignored here, and then a red bar ignored right here. Long play right there, targeting previous day high. We had an instant move up to PDH, clearing 87% on this trade, right? So 87% ROI, first trade of the day. Once again, not because I'm smart or I'm this or that. It just literally is a product of the strategy. Why can't I type in? Okay. So, and that's like what I really want to highlight, right? It's like there was really no difference between Monday and Tuesday. The only difference was on Monday there was strong follow through. You can see here, this is the 4-minute time frame on the right-hand side. And the reason why I've been preaching 4 minutes so much, guys, is because the risk reward, right? Like when you're looking in terms of profitability, right, you want more reward and less risk always, right? Like if you want the ratio to make a lot of sense, okay? Now, the 5, we've been trading the 5 for 11 months, specifically on this strategy, and it served us quite well. These last 2 months, we've been dipping down below 70%, where we were averaging that 85% in the beginning of the year. But now we're starting to see different market conditions. So what we've done is adapt briefly to the 4-minute, okay? And this is a great example that I just want to flesh out here. On the 5-minute, we got this, our long would be right here at 64323. Okay, so I'm going to add a little drawing right here just to kind of highlight it. And our risk would have been right here. Okay, so you'll see here, there's really not too much of a difference on this specific trade. But as we jump a little further, you'll be able to see some differences. But honestly, we don't want that much of a difference. We just want a little clearer entries, right? And exits. So once again, the 4-minute proved to be exceptionally well right here. We got open print. We got a very, very clean moving average cross. And then we got that strong move to the upside. Okay? So great, really good play right here. Hold on, guys. Just do me a favor. Make sure your mute is on. Unless you actually got to say something, go ahead. Say something, but if not, just make sure your mute is on, just so we can't hear everything in the background. Thank you. All right, cool. So once again here, clean, very clean RBI. Red bar ignored, long play right here, targeting previous day high. Okay, perfect move to the upside, happened very quickly. Now price rallied up into PDH where we trimmed half our position and then all of the position. Once again, because of how extended we ended up getting from that moving average. And the fact that we rallied immediately into previous day high. Hold on, guys. Let me just mute our buddy over here. Okay, cool. So, and, once again, taking profit, I don't want to stray away too much, but when it comes to taking profit, if any time you're over 50, 60, 70%, make sure you're locking in something, if not all of it. Don't be a hero. Don't take profit super quickly. But if you're ripping into your target and you're up 87%, be okay with taking the profit, right? Especially in these current market conditions. And after the day before, I'm not going to lie, I definitely was a bit antsy to take that money. Now, the next trade right here, we ended up going short a little bit lower, down below previous day low. But this is a great example of the 4-minute time frame that I just kind of want to highlight for you guys. So the chart on the left, you're going to see right here, we're getting a green bar that's ignored, right? At open print, right? So we're at open print. We don't have a moving average cross though just yet, all right? So if you were only trading the 5-minute, you may have not taken the setup. Where on the 4-minute, you can really see right here, look how buyers, hold on, let me get rid of these lines. Look at how buyers and sellers right here really look at how sellers really showed up here at end of day, right? So we have EOD, we have a clean green bar right here that gets disrespected. That would have been a great short play. I didn't get that short play, and that's completely fine, right? But it still helped me understand the context, okay? So like when it comes to trading, just because you didn't get in right there doesn't mean it's not valuable, okay? Like we still understand, hey, sellers just defended end of day very well. Buyers provided a green bar that was disrespected on the 4-minute, but on the 5-minute, you may not have taken it because the moving average wasn't there. So once again, this is just a very good example of how the 4 minute is going to give you a little more precision. And you can see the 4 minute still has really good follow through. Okay, we've been doing a lot of back testing on this. It's definitely, I'm confident enough to tell you guys about it. It's very good. Now, okay, we ended up going short right here. All right, so let's walk through this trade. Once again, very strong selling at previous day high, pushing price down below. We fall down below previous day low. So once again, that's a critical level. And the moving averages have already crossed, but guys, look at the 1 hour 9. Look at this. We have just crossed over it. We've fallen below the 1 hour. This right here, being below this when we were just up here, is exceptionally bearish. Okay, that means like all this price action to the upside was just a massive fake out, and now we're back below the 1 hour. All right. So, and now this is where I go, okay, what's my 5 minute trend look like? It was lining right up with PDL. We got a clean green bar right here. That was disrespected. So we hopped in the market short. All right. And this trade right here in the first like 10, 11 minutes, we got a very strong push to the downside, right? This is almost a $2 move, these two candles. Where I trimmed half my position, right? I was trading 2 SPX contracts, took one off the table. And the next mistake I made was kind of, well, let's talk about it. I don't want to call it a mistake, but it's definitely a situation. So I hop in the market short with 2 contracts. I take one off the top, and I'm still holding one contract. Now, the reason why I'm holding the contract is because our downside target was pretty low. And not only that, it happened kind of quickly, right? So you might tell yourself, hey, I'm going to use the 2 minute. And this is where awareness is really important when it comes to taking profit, right? And what I mean by awareness is how much are you willing to risk to see if you're right, okay? So I heard this saying one time, and I thought it was one of the best things I ever heard. It said, do you want to be right or do you want to be rich? Okay, so this definitely pertains to trading. So if you look here, if I'm in this trade, right? We've been talking about the 2 minute a lot, so this is going to make a lot of sense. If I'm in this trade and we hop in the market short and it's moving down, just notice here, guys, once again, how far away we're getting from the 9D EMA, right? We're about $1.20 away from the moving average. So never hold something that you're not willing to get a pullback to that moving average, okay? Like when it's $1 something away, that's potentially going to snap back into it. And not only that, we got a very quick, violent move down. Okay, so the polarity of it altogether means pullback. So the market starts to pull back, and you know what? I'm actually okay with it. It's completely fine. I'm not, necessarily worried about it. I want to see if this goes further. Now, how it works though, and where I kind of slipped up is I gotta basically hold to that 20. Okay, like that 2 minute 20, I gotta hold till. Now, if you'll notice something here. Let's go back to the entry. The reason why we actually entered this trade was because this green bar, okay, that was ignored. So if you guys watch my videos, you guys know how important this level is, or this zone. We call it the area of value. This is key. This is one of the most important takeaways from this webinar, okay? Because these market conditions are so damn erratic that you're gonna want it. Like, say you miss these plays right here to the downside, you're going to be wanting to watch this, okay? The retest and rejection. It's very important. Now, what happened on this trade, though, is I'm holding based off the 2 minute 20. We're come up to the area of value, okay, which was actually very pretty. And we retest it right here, and we reject, okay? So we go, okay, retest here, retest here. And I'm at about break even on my trade, a little bit below. So I don't want to give a lot of the money back that I just made, right? I mean, that seems logical. I always tell everybody, if you're up in a position, a good amount, 30, 40% at least, drawdown really doesn't make sense, okay? Like if you've already been up 40%, don't be the guy that is up 40 and gives 40 back. I don't care what the circumstances are. So I'm willing to hold right here because of my understanding of how well the 20 works. It's lining up with this green bar that was ignored. There's a lot of good things working in my favor here, right? And then this happens. Boop! And I'm like, damn, it got me. You know, it is what it is. And you know what? That's completely fine. Like, look at this. This is like, go back to the chart on the left. Right here, we're getting a very nice green bar right here that's been disrespected. Right? There's definitely a lot of good, like, confluences here helping me stay in this trade. But I end up stopping out of it on this candle. And I go, okay, it is what it is. Now, little frustrating. But we got to get our ego in check, right? Like, the market doesn't care about my feelings or my ego or what I think's right, even if all the stars align. Like, we literally had the 1 hour 9 right here. There were so many things telling me to add here and to really push. But it just didn't go my way. There's a little hiccup, right? Now watch what happens. Bam. So it hops up, stops a bunch of people out, and then continues in the downward direction. So I could either slam my computer shut right here when this happens and then miss this beautiful entry short, which we ended up getting, to capitalize on this move to the downside. Okay, so moral of the story is you're going to have rules, you're going to follow them, and the market's still going to get you. We call that slippage. The goal, though, is to be resilient enough to continue to execute them. Because if and when you do, that's where the system becomes fruitful. Okay? Like, we can't control if this one doesn't go in our favor. This week's been extremely crappy. But we can limit ourselves to losing money, and we can capitalize on the next play, right? And once again, anytime, guys, I don't care where it is. If you get a green bar that's ignored, draw a box around it. Look. Boom. Perfect retest. Oh, Josh, there's another GBI. Draw a box around it. Oh, perfect retest, okay? This is literally how you make boatloads of money on days like this. They're very important. Days like this are the only reason I'm able to maintain a positive equity curve, okay? Because the way our strategy works is when you're executing appropriately on days like this, you make a lot of money, all right? These are our bread and butters. But I think we did really well. We can't plan for everything. But we executed very well. So I was very proud of this day. It was really good. Next day, Wednesday. Hold up. Let me hit the coffee. Oh, the espresso. All right, next day. Wild price action right out the gate. Once again, we'll just map some pit numbers here. We got previous day low. We have EOD. Once again, we're looking to see who defends this. If sellers take it, we are going to target the downside. If buyers take it, we are going to target the upside. Okay? 50-50. That's what we call it. You know, don't overthink it. 50-50 it. We got enough of shit going on to be overthinking everything, right? So we just let the market tell us what's going to happen. Well, we get a bunch of selling here. There's no play for me. But there's still key takeaways, right? What are some of them? Well, number one is look at this. Look how sellers are respecting the 20 here, okay? We're just really selling through PDL. So all of this right here is just telling me that things are relatively bearish, okay? If I can get an RBI or GBI, I'm definitely getting in it. And we get one. We get one perfectly, except I wasn't in front of my computer right here. So I missed this trade. Now, once again, you can cry about it. You can do whatever you want about it. This was a great setup. It was definitely a little sketchy, only due to the fact of how fast we were selling off. But I was so happy to see traders take this short right here. Great play, right? Look right here. And the key takeaway right here, guys, is this moving average, the blue one. Okay? This is the 9 DEMA on the 5-minute. This is the healthy trend, okay? You see how we're hugging the candles. Even though we are getting a little extended, okay? But when this candle closes and that moving average is on the candle, that means there's a very high chance of a continuation at least to the next target, okay? In the 1 hours, it was relatively close. I mean, I don't know what you want to call close in these market conditions. But this was the 10 o'clock candle too, so it sucked it down. Great short play right here. Once again, guys, if you missed it, you draw the box around it, okay? Draw the box. What does the box mean? Area of value, all right? You get the box, you get the retest, and then you get another green bar to be ignored, okay? So this right here is where I ended up getting in the market short, targeting this guy right here. And it may not look like a big move, but that was still about a $1.20 move. So once again, right, like we don't need like tons of crazy, like out of this massive, huge move right here, even if you're grabbing this, you are still going to make 20 to 30% return on your investment, which you're not going to find any, like, you know, as traders, it's so funny and crazy how our expectations get so out of whack. Like 30% ROI, even 20, like that beats the S&P on a year-to-year basis, right? Like, you know, if you go tell somebody that doesn't day trade that you made 30% ROI on an investment, they're gonna go crazy, right? So, you know, the more it may feel like you didn't do anything because you missed all this, but in reality, maybe you were just treading lightly because of the way the market's been, and that's okay, like to an extent, right? I've treaded too lightly before, but basically is what I'm getting at is draw the box around the GBI, okay? Always. Doesn't matter, draw the box. The box right here is going to continuously provide opportunity on the retest, right? We've seen a great example of that on Friday as well, which we're going to get into. Okay, so that was a really good play right there. There's another RBI right here. That was a pretty good play. Didn't really have the follow through I was looking for here, but it was still a really good play. Okay, and once again, what I did right here when I went long was literally I was just playing once again off this area of value. Okay, like price comes down, hits its target right here, comes back up to the area of value, and look at this price action. Okay, this is a little bit stronger. Buyers are trying, so necessarily I might be looking for RBI right here. We don't get it, so when we don't get it, I just stay patient until I do get it, and that would have been great opportunity to play to the upside, right? And then once again, just to show you guys how important these levels are, anytime you get an RBI, draw the box, and you'll spot these little clean retests right here, okay? These are also great opportunities for long plays, all right? That's where I got in the market long right here. So once again, like even if you miss your play, that's okay. Just wait for the retest, all right? That's the moral of the story right there. Thursday, just not, once again, not the best day for me. And looking back, I definitely could have done a lot better. In a few different ways, right? Number one is, you know, when you're getting candles like this that are $1.93 range, and like sellers show up here, push price down $2, and it gets sucked up in a minute, it's for a reason, okay? The market's very volatile. We end up getting our strategy, but it just happened so quickly, and it really wasn't any way to capitalize on this. But the market was doing its thing. It's trying to go up to end of day. And then we look to take the market long, which we do get pretty good criteria. I mean, look at this. All right. We got open print. We got moving average cross. We got our RBI. We got to take this long and target end of day. This is usually a really good play. The 1 hour was just a little low. I don't even want to say that it was a factor, though. This was just one of the trades that just didn't go. You know what I mean? And you know what? It's what it is. Great criteria, just no continuation. Price fell down below, and then one thing I just want to point out here is how well price is respecting the 20s. Really good right here. Price then comes into the 20, rejects, draw a box around it. Okay, price comes into it, rejects right here. Just really not good price action whatsoever. Friday was an absolute massive rally that I think is going to help the market really start cooking here in the next week. I think next week's going to be a really good week. Yeah, it might still be a little volatile, but I think we'll be out. We got the tools to navigate it appropriately. I'm gonna whip out the 4-minute and show you guys why I entered where I did.